Well, hello there, traders and investors. I'm LA Little. This is your daily NeoTA wrap where we take a look at these markets and we do it from a neoclassical perspective. Supply and demand on the charts, when to get in, when to get out, which way to point. Do show 4 times a week, Monday through Thursday, broadcast at before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. And if you want to subscribe, just reach up in the right hand corner and do so. Anytime I push public content, you'll get a notification. As far as what these markets did, well, they shot down my thoughts. You know, they in a bull market, it is very hard to get something to the downside that sticks. We got a downside push yesterday. Today, takeaway bars right back the other way. They killed that thing faster than they swatted a fly that's aging. As far as what they did, the numbers were up big, 1.5%, 1.4%, 1.4%, and where is the S&P? S&P was up a percent. There it is, almost a percent. So a big move to the upside. It was a trend day up on the intraday time frame. You were flat in Europe. They'll probably get a bump. You'll probably get a bump in Asia and in Europe on carry through. Bonds down again. You actually still had gold up a little bit, silver, oil up again. Dollar gets beat down. We had Draghi talking about tapering of all things. That seemed to put a little push back over in Europe. We'll see if that carries on. He had to walk that back just like Bernanke did. What was it, about 5 years ago? Bernanke did the same thing, and then everybody started talking about, oh, well, that's not what he meant. We're never going to taper, right? And so it's the same old, same old. Doesn't change. Let's look at the charts. We'll start here with the S&P 500. So the takeaway bar you see on the screen there. So essentially what that means is that you take away all the badness of yesterday. You take it all back away today. Usually you want to see those two bars about even, right? That's what a takeaway bar means. You pretty much just end up where you were the day prior. And so you can take it away bad or you can take it away good. In this case, you take away the bad, make it good. You're back at the highs, top there yesterday, 244015. You close above it slightly today. That range bar, top of it's 2446. And so we're up against it, another 5-6 points. I expect it will test it tomorrow. Given that you've broken out on the range once before, we could get a nominal new push, back up into that highs and try to do it again. But as I said last night, the ABCD structure here had already completed. It was done. It had completed off of that bar prior to yesterday's close. And so today, at least for this index, it wasn't a big surprise. If you move over to the NASDAQ, there the surprise was that this thing did a takeaway bar as well, because there you had the potential for a much larger ABCD down, and actually you looked like you had decent momentum to at least test those lows. Didn't happen. It held, and instead what we have going the other way now is a takeaway bar as well. NDX looks about the same. I'll move over to the Russell, and on the Russell, back up to the high. It's going to test the top of the range again. If we look at these sectors, starting with what should be the weakest of the group, we had the SOX. So you got under, back over, right? Had more volume though. The test over here against this low is still less volume like we talked about last night, but you actually had the ABCD structure down, and now it doesn't follow through. And that's what happens in a very strong market, right? Setups like this, which should provide you good returns, end up reversing on you. And that's why you have to trade these things when you're trading against the grain. And in this case, we were not trading against the grain in the sector, so to speak, although we haven't broken down on the weekly, but we were trading against the grain in terms of the general market, which has been quite bullish. And so SOX turns around. If you go over to the biotechs, which had been leading the charge prior to this, they got a nice big spike up. A little less volume, and they do an under over, just slightly under over. So they should try and test the top of that breakdown bar from yesterday. Let's see what some of the other sectors did, see if there's anything interesting. I'll flip through them and I'll highlight if there is. XLB, nothing special there. Looks like it should try to trade back down. XLE, that's still sucking wind. I just would stay away from it if I were you. When it finally gives us a move, I'll be the first to alert you because I keep watching it. Now the XLF, this one was interesting. So one of the things we saw is the Fed cleared these big financials to start doing some dividends and some other things, and that got these guys rolling again as well. You had that big pullback yesterday after the test of this top here at 24.33. You got to 32, pulls back. Today it gaps back up, runs up, and where does it run? It runs to the next one, and that was the original target on that bounce trade I was trading. 24.54 gets to 24.56, closes at 52. This should range trade now. Now, the thing I would note, if you're wondering on how this is going to work, is that in this chart, what you see here is, let me get this so I can see it. What you see here is that on that push down, you did a full retest regenerate. And that was after more than 6 bars. You had more than 6 bars here before it came back. When you do a full retest regen, that's weaker than you expect. And so this push back up to the highs, I'm expecting will probably fail. Maybe it makes a nominal new high, but I expect it to come back into the range and potentially even test these lows again. And so that's the way the financials are set up. And that next trade down is not nearly as appetizing as the one we just traded. Let's see what else we got here. XLI. Now this is the one I was watching, and yeah, nothing there. Technology probably got a nice bounce today, like everything else. Takeaway bar, it did. XLP, this one's been sucking air, still is. That one's not going anywhere. Utilities got hit today, which you would expect. Healthcare, inside bar, nothing there, so you have to go off the biotech, and the biotechs are going to try to lift. And XLY, so you get a break at the swing point low. You bounce around, you do an immediate retest regen. I think the real key here is what do these do. Now this is where we're going to see, how weak or strong the market is. Is it still weak or not? Some of these tests that take place, like this one, it's a bearish retest regenerate off this swing point low. So it's coming back within 6 bars. It's already done it once. As it comes back in there, if it gets to the top, gets rejected and sent back down, then it's weaker. If it doesn't, if it trades above it, well, bull market's still intact, and still intact even in this sector. I don't know that there's a lot more to talk about. I did see the dollar selling off today, and actually got a note from a member. Let me go check it out real quick out of curiosity. Because a fast move in any of these currencies usually ends up being something to monitor. So you get the breakdown on the swing point low. It's doing a test of this low on the highs, 24.94, and it's up underneath it now. So this is on a weekly. So what you want to see is if you're bullish this sector, or this ETF, the dollar itself. Really what you want to see it do is you want to see it hold this area. So you want to see it get under, which it already has, right? That's the test. But fail to stay down there. In other words, pop back in. If it does, then maybe you finally got a bottom. But until you see that, you don't know. You only got a couple days left this week, so it won't be hard to see if that actually works or doesn't. Pulling over the monthly, let me stretch this out so we can see it. So on the monthly chart here, yeah, see this still can, on the monthly chart you got the big range up, right? When it popped up here, you got that big spike up, and then it set up a big range up here. And on the dollar, it's a pretty big range. It's trading inside that range. It's in the lower half now. If it stays down here this week, breaks on that weekly, then you can expect it to try and test the bottom of the range. And if you're trying to be long this, the ideal spot to get long is going to be down here if it holds. Now, do recognize that, the last time it came down here, it made a nominal new low compared to where it was. You could do the same thing again, but as long as it holds this general range, right, that change between here and there, it represents about 10%, right? So you got about a 10% spread between the top and the bottom. And so if you're trading this and you're bullish on the dollar longer term, then there's a 10% move here, top to bottom. You want to watch that as it comes back into it. I don't have anything else interesting. The market, once again, proves very resilient. It's going to continue to be resilient until you start seeing some setups on the weeklies that give this market a better chance of actually breaking something of significance on a longer time frame. Right now, nothing's breaking. You do have some heavy tech, but bullish markets, they don't give up easy. People come in and they chase the stuff that's winners. When they get slapped a few times, then eventually they go somewhere else. Tech being such a strong weighting in the ETFs, in the overall indexes, as long as tech holds up, this market's going to hold up. So it comes down to the point of, does tech give it up or not? I expect another bounce in the morning. S&P try to drive up that 4 or 5 points higher, and then we'll see if it stays in the range or not. My expectation is it probably will. That's it. Have a great one. Take care. Good night.